Welcome back to the Market Matrix, and today we're not going to be speaking about any candlestick patterns. We already went over a bunch of them: double bottoms, head and shoulders, triple bottoms, wedges, broadening bottoms and tops, all sorts of things. We'll get back into more candlestick patterns and certain chart patterns, but for now let's speak about trends. Now, we hear this term trends throughout our everyday lives. We hear it within social media, within fashion, within the weather, within the markets. All over the place, we hear trends. Now, the definition of trends, if you Google it, you'll get a general direction in which something is developing or changing. So what does this mean exactly is, well, when we see the transition from summer to fall, fall to winter, we could see the weather changing. We could see it's consistent in the summer, it's consistently hot, and then it starts to switch up in the fall, it starts getting a little chilly, and then the winter comes along, and it stays cold and rainy and snowy for a while until it transitions again. So, trends stay for a while, some of them stay for a long period of time, and then some of them get phased out, the trend changes, and so on and so forth. So when we look at it in terms of the market, it's similar in some sort of way. So we have a stock that might go like this, and then it might go like this, and then it might go like this. So if you notice, the trend over here was up, it was trending up, and then it just started moving sideways, and then it transitioned into this downward trend. So let's take a look at this. We have this stock that's going up, it's going up, it's going up, it's going up, and then what happens? Once it continues higher, what do we see? What are we able to notice? We notice these pullbacks it has, but these up moves it has as well. So what does that allow us to do? Is we could take a line and draw it on the top and draw it on the bottom. See where it's getting rejected from the top and see where it's holding as support from the bottom. This is considered your trend resistance up here, this blue line, and this blue line down here is your trend support. Again, support is supporting the price from going any lower. Resistance is resisting from going higher. So we see this trend, and what is this trend? It's an uptrend. Now, can an uptrend be at some point changed, like we spoke about the seasons? Yes, absolutely. This can go like this and break this trend support, and now this is still within this, it's still like overall up higher. It's higher, the price. But this trend over here within this channel, this is called the channel, by the way. When you see the price bouncing between these parallel lines or close to parallel, that is considered a price channel. So it can be like this, a channel can be like this, a channel can be like this. So it's stuck between these. This is a channel. If this channel is to be broken, okay, this trend has given up, but there might be a bigger trend on the bigger picture that we see once we zoom out. So here we have this uptrend, and what do we notice? Okay, there's a trend line over here, trend line over here, trend line over here. But if you zoom out and you're able to look at the bigger picture, you could draw that line and you could see that trend line. Now, what that trend line is, basically the most zoomed out, strongest trend is your primary trend. Again, we have trend over here, trend over here, trend over here, but let's look at the biggest trend over here. The strongest form over here is this trend over here, which is what we call the primary trend. What we can also see is this trend over here. This is considered the secondary trend. So it's the trend within the trend, the most obvious trend within the trend. And then we see these little pullbacks over here. You might say, oh, these are trends too. The stock trends up and then it trends down and then it trends up and then it trends down. Yes, these are trends, but these are called minor trends. So these might be a couple day price action. Like if we're considering this is a year's time, this is January and this is December, for example, within this year's time, this is the primary trend, this long form of support, this strong support that every time it came to it, the stock held. This is the secondary trend over here, which let's say this happened across the span of 8 months. And these trends over here, let's say each one of these is a couple weeks. Yes, these are trends over here. If this is an intraday time frame, let's say this is 10 o'clock and this is 3 o'clock. What's the primary trend? This primary trend is the trend that the stock was holding on throughout the whole day. Then we have the secondary trend where let's say this is among 3 hours of trading time. And then these might be 10 minutes, 10-minute trends. So again, you want to focus mostly on your primary trend. That's going to be the most important one you want to keep an eye out for. Even though you're not going to be trading that, let's say you're trading from here to here, You see this trend support, trend resistance, and you want to trade in between. You want to buy over here, sell up here, buy over here, sell up here. Cool, it's good to know that. But if it breaks over here, you need to understand, okay, maybe you could go short, but you need to know that there's trend support over here. So you always want to keep an eye on everything. We have the primary trend, which is the big picture trend, and then the secondary trend within this big trend. And then we have minor trends that you'll see within the secondary trend, within the primary trend, and you'll basically see them all over. Now, one thing you always want to keep in mind is anytime you see a trend, you need to keep this in your mind. The trend is your friend. So, over here, for example, let's say you wanted to assume it was going to break down over here. There's no reason to assume it's going to break down below this line over here if it's constantly holding it. So if you're betting that, if you're anticipating that it's going to break below this trend, okay, cool. Over here, you might have some information telling you, okay, some data telling you, okay, this thing might go down because it broke this trend. But before that, you just got to stay within this trend. This trend is your friend. And a lot of times, if you try to assume that it's going to break the trend before it actually does, it can burn you. So you always want to keep in mind that the trend is your friend. Let's say it broke this secondary trend and it comes down here and you're like, hey, what's going on? I want it to go down. The trend. You want to keep in mind this trend. And you always want to keep that in mind. And don't assume that it's going to keep going below the trend just because you want it to. If the data aligns that way, okay, that's a different story. But the trend is your friend. You want to keep that in mind. So let's look at another example. We have a stock here which is in a downtrend. We see over here, bounces up, goes down, bounces up, goes down. Each time it goes lower, each time it runs up, it breaks the low each time. And that's what puts it in this downtrend. It keeps breaking the low that it formed. Over here was the low, broke right through it. Here was the low, broke right through it. Here was the low, broke right through it. So we could see lower highs, lower lows, and the uptrend was higher highs, higher lows. This is lower highs, lower lows. So we see it's in a downtrend. The trajectory for this is lower. It's in this channel, but it is going lower. Now, let's see what we can find. We have the primary trend over here, where on the longer time frame, or it could be a shorter time frame, and you zoom out. For example, if you're looking at a 5-minute chart, instead of just looking at, let's say 30 candles, you zoom out and look at, more time. So you could keep it at 5 minutes, 5-minute candles, but instead of just looking for 5-minute candles within 30 minutes of price action, you could look at 5-minute candles for the entire day and then be able to see what the trend is. Because let's say you're looking only over here and you ignore this and you ignore all this. Well, what we can see over here is an uptrend. But if you only look at that, what you fail to see is that this is trending lower. It went like this, it went like this. Now let's say over here, this is all you look at, over here, this price action. What you fail to see is all of this. So you don't see the fact that it bounced up over here, bounced up over here, and it bounced up over here. But what happened each time? It broke into new lows, so you can't assume, okay, this is going to keep going higher from here. What you can assume is that, okay, maybe it'll reject from over here because of this resistance that it had. So what else can we find over here is this secondary trend. Now again, we just spoke about this. This secondary trend over here is within this primary trend. So it's good to know that you have this primary trend, but okay, this is trending higher over here, but overall this thing is still trending lower. So let's see what happens. Okay, cool, it continued lower. Boom, this thing is proving itself even more to act as some trend support over here, and this downtrend is proving itself more to see that we are in a downwards trajectory. So we have the secondary trend over here, again, which you can trade this. You can trade if you see, okay, it bounced over here, it bounced over here, third time maybe it bounces over here and goes up over here. That's not a bad assumption to make, even though it doesn't. Okay, that's not a bad assumption to make that it'll bounce up over here. Boom. It failed over here. At this point, you realize that, okay, if I went long over here to trade this bounce up to this trend resistance, okay, I was wrong. It broke the trend. Okay, cool. You cut it right away. That's it. You know that this trend is broken, and it's safe to assume that this thing might go lower. Maybe it holds over here. We don't know. But if it keeps going and we see over here, then again, this primary trend is proving itself to be the primary trend. Now, again, what else do we see is these minor trends. We see this pop over here. We see this drop over here. This pop over here. This drop over here, this pop over here. These are the smaller trends within the trends. Again, primary trend is the bigger picture. You have the secondary trend within that bigger picture, and then you have minor trends sort of all over. The minor trends are just going to be these little pops. So if this is a yearly chart again, then maybe a couple days price action, a little bounce or retracement, consolidation, whatever it is, those might be the minor trends. If you're looking at this is 1 day's worth of price action, maybe a couple minutes of a pop, a drop, a pop, a drop, that might be your minor trends. So let's take a look at some examples. So this is a S&P chart, SPY. That's the ticker symbol. And it's obvious that this is an uptrend. We see that from here, it's been going up, coming down, going up, coming down, going up, coming down. But this primary trend, we can tell that it is up. We can see that. Boom. Primary trend is right there. We see it bounced off right here. Came up, came up, came up, came up. Boom. At this point, we see it held over here. Came close over here. So at this point, we can see that, okay, maybe this is support over here. And it keeps going, comes close, holds it, holds it, holds it. And over here, it breaks it. So this trend has been going on from November of 2020 up until about middle of September of 2022. So this is about a year. So that's the primary trend that we see over there. Now, what else do we see is this secondary trend right there. We see that the price came here and it's bouncing between this channel that's also trending up as well. We see it's bouncing here, bouncing here, bouncing here, bouncing here, up until it breaks it over here. Now, what else do we see? Again, we went over this, is these minor trends. Again, this is a minor trend, this is a minor trend over here, this is a minor trend over here. This is a minor trend, this is a minor trend. All these are minor trends. So, when we're looking throughout this whole year of price action, these minor trends could be, let's say, a week's time. 1, 2, 3. This is like 5 candles, so each one of these represents a day. So this is a week's time. The minor trend is a pullback. A pullback and it goes higher. Pullback goes higher. Pullback goes higher. Pullback goes higher. So again, this is an uptrend. Primary trend, we could see it over there. Secondary trend, we see it over there. And then we have these minor trends in between. Now let's look at another example. So remember that this one is in an uptrend. And now the next chart I'm going to show you is not long after this chart. It is the same chart, except we're looking into the future a little bit. Now, here we go. Eventually, that trend was broken, if you remember. The trend broke, and over here, the market topped out. We see it starting to, the trend at this point was just moving sideways, sort of. Wasn't really going up, wasn't really going down. And then, until the market came down, boom. Came down more, pulled back up, came down more, boom. This primary trend over here, we can see it. We can see it's proven itself as a trend line. So the trend at this point is down. And what do we see? We see there's some trends over here. These are secondary trends. Secondary trend over here. This is a secondary trend. This is a secondary trend over here. So these are all secondary trends that we have over here. So what else do we see is these minor trends. Over here, there's a minor trend up. There's a minor trend up over here, minor trend up over here, minor trend down over here. There's a lot of them. It's too many to go through and name them all right now and just point them all out right now. But we see all these minor trends. So, summing this all up, trends can happen like this. We could have a trend that could go like this within a channel. We could have a trend that goes like this. Doesn't necessarily have to be within a channel. It could go something like this. We could have something like this that keeps reverting back to the trend support, trend resistance. We can have something that goes like this, comes down and then goes sideways for a bit, and then goes down again, goes sideways, and then it has a trend like this, for example. Or something could be trending sideways. It could stay sideways. Boom. What's the trend at this point? It's not going up, it's not going down. It's just a sideways market, you know? So I hope this video helped you understand trends a little bit more, and I hope you find all these videos helpful and look forward to watching the next video, because I look forward to making the next video in order to teach you guys whatever it is you need to learn when you're diving into the market matrix.